Hey, everybody. Welcome back to RainKingInsights. This is John. It's time for a general market update. It's Saturday, but this update is as of Friday, June 21st. Again, the presentation is for educational purposes only. And before we launch in, RainKingInsights is getting ready to launch. I've been working hard to make sure the bugs are worked out. If you're interested in this at all, send me an email to support@RainKingInsights and I can share some early bird coupons. Now, I wanted to go a little deeper and give another refresher on what this membership is all about. Basically, it's an educational product, 3 basic memberships. There's a basic membership for young traders with 0 to 2 years experience. There's a premium membership with people with generally 3 to 7 years experience. Then there's the Rain King membership for advanced purposes, traders with 8 to 10 plus years of experience. The concept works like this. There's an educational series. This in case the basic is called the Raindrop series. Then we have the Sprinkle series and the Cloudburst series. Essentially, upon the launch, I'll be dropping 3 videos on the launch. And then what we'll do, there'll be 3 in each series. Then we'll have a live coaching huddle with the particular membership level where we're going to review everything in the videos, take all of your questions, and do some coaching. So hopefully you have a better understanding of the material and get all your questions answered. The memberships all include the general market updates, the GMUs. They also include the GMU Extra series as well. So you can write the series material. You can see here the Raindrop series over the course of the 12 months. These are the topics we'll be going over. Here's the Sprinkle series of topics, and the Cloudburst has a series of advanced topics. I'll be sprinkling other topics in along the way, so this is not exact. But the initial drop is in bold. These are the first 3 in bold for each of the series levels. That's the big quick overview. If you're a premium member at the Rain King level, you will get actionable ideas of my watch list and actionable setups in a weekly video to come out on Tuesday evenings. Also, you'll have access to all the previous Blue Sky event archives of all the presentations. So a little extra stuff in the advanced level. So moving on, if you don't find an interest in this series at all, there's still a lot of free stuff on the site that you're going to be able to take advantage of and try out. So for example, if you're not a member, you can still get the monthly general market updates, which will be the first one of the month. Also, there's going to be an example of a course or 2. One of the videos will be up there to give you a chance to see some of the style of the presentations. And whenever I do a speaking engagement, those will be posted to the website as well. And it's all for free, so take advantage of that. Also, my research and model book studies are going to be available for purchase. But here's a great way to get a sneak peek for free. You don't have to be a member to go to the reports. You can go in and see some sample pages of each report. So if you go into the website, under the unlock button, you click on that, it'll call up 4 or 5 pages from each of the reports to show you the table of contents and then show you some sample pages of the report. Great way to see if any of these reports make sense for your trading library. In addition to that, more free stuff. My GMU Extra Sun Shower series, which are short form videos, they're usually about 10 to 12 minutes about a specific trading topic that you can get a little lesson in. So there's plenty of these already available. There's at least a dozen, and I have at least another dozen more planned that'll be coming out, roughly monthly every 6 weeks. So again, if you sign up for a membership, all this stuff is free to you, but you have to be a free member. So you have to get at least a free membership, which costs you nothing, to get access to all of this free material. So take advantage of it. If you want the general market updates, because you enjoy those on a weekly basis, you have to get to the basic level of membership so you can continue to get the the weekly general market updates. Still pretty cheap at roughly less than $6 a week. So take advantage of the free stuff if you're not interested in any of the pay subscriptions. Okay, with that out of the way, let's get to the weekly update. Going to look at the indices, then we're going to look at rotation or rollover, and then a summary. So the indices and breadth. This is last week's video. We were targeting the S&P 500, and we essentially were saying there were a lot of bad breadth days in here. It wasn't a situation where there were a lot of distribution days, but the whole picture was negative in terms of high new lows. So we're going to turn our attention to the NASDAQ this week. If you want to hear this detailed explanation, go to last week's update. So here's the NASDAQ composite as of yesterday's close. You can see here in the past week, the index continues to make multiple new highs on the heels, essentially, of Microsoft, NVIDIA, and Apple. Those three names are 25% weight of the Qs, really helping the NASDAQ composite. You can see here, you had 2 or 3 days, new highs, but then on low volume. That's usually very much a cautionary sign. And then we had on Wednesday, we had a stalling day. You can see the volume picks up, and we really go nowhere but spin in place. And then we also had Thursday was the large caps finally broke. The AI names in that group took a nice hit here, and it really led to Friday. And Friday was some stabilization, but you know, the market looks like it's going to come in at the index level. So staying with the NASDAQ composite, this is new highs, new lows on a blown up chart. Again, we've been flagging for weeks that this does not look great. So I won't bore you with all the details, but we can't even get up to 50 net new highs for at least 2 to 3, 4 weeks. It's really weak. And you can notice this particular week, this is really where the AI trade has kind of popped. And you can see the new lows are accelerating this week more than we've seen in the past month. Not a good picture. Now, we've been flagging these for the past 4 to 6 weeks. I've just included some of the tweets. Here's the NASDAQ composite on a line chart. Just to recap, we came out in May 17th. I put a green arrow here. Things looked pretty darn good here. We were buying stocks. We were starting to come back out of this brief pullback, and things looked good. But what's important is we have to use our tools to help us with reading the market, and we have to be flexible. You can see here that it was about a week or so later I started to flag that the Mag 7 didn't look great, but NVIDIA was still chugging along. Then we got more signals that the breadth was really weak on June 4th. Then we came back on June 7th. It didn't look good. That most of the dials of tools that I look at for indicators were not looking good. June 10th, in the general market update, I spotted a lot of these breadth divergences and then all these bad days. Even though NVIDIA was still going good, the pullback warning signal was firing, et cetera. So there's been a lot of clues in 3 weeks that we should be been very cautionary in the market. And there were only a very large cap stocks that were AI related that were still moving. So rotation or rollover. So let's start with NVIDIA. It's the talk of the town. This has got a daily chart here on the left and a weekly chart on the right. I covered this about a week or two ago that, NVIDIA, it's the king. It's the #1 leading stock in the market. But that we said, look, stay balanced, stay objective, and don't be blind and bullish. We're starting to see sell signals in the stock. We had mentioned that there were numerous gaps on the way up. We passed this 3 trillion valuation, which was a clue. We had a 10-for-1 split. And then you'll notice also on the chart, we've had 5 days in a row of new highs on low volume. Demand has not been there the last week. So again, these are all smaller sell signals. And they're just telling you that you should be cautious in this situation, and it could be trimming your position. You'll notice that we had an upper channel line break. That's another sell signal. So the sell signals are piling up. I'm not saying that NVIDIA's topped forever or anything like that. What I am getting at is, there's a lot of exuberance about this stock. And so I actually pulled a tweet. This is a tweet. I blocked out the name of the person, but they said yesterday, there isn't a scenario in the world where NVIDIA gets anywhere near 103 ever again. 120 maybe, but I doubt it gets to 120. This is the kind of blind and bullishness that can develop when people have a big winner on their hands. They start to think they're bulletproof. And this is where you can get your head handed to you in the market. You got to stay objective. You got to stay balanced. We'll see how this turns out. But for reference points, we closed right around 126 on Friday. And also notice that the 50-day moving average, which would be a normal thing for a stock to do, is at 100.98. So I had to clip this. It was just, to me, it was a sign of just this kind of mindset of a lot of people think NVIDIA is bulletproof. It certainly is the big leader in the market, and I'm not saying it's topped forever, but I think we have to be really, really aware that NVIDIA has been a great winner, but only a fool holds out for the last nickel when seeing some sell signals. It may be a time, depending how you're positioned, it may be a time to trim, depending on if you're bought way up in here, maybe you need to sell your whole position. But if you're bought way down here, maybe you're just trimming, or maybe you're just holding as a position trader. It looks like it's going to be coming in a little bit here and at least digesting some of these gains and maybe correcting a bit. So we'll have to see how it plays out. But I'm pointing out this chart because a lot seems to hinge off the reaction. So to what happens to the rest of the market if the big leader NVIDIA pulls in. So we want to see when NVIDIA comes in, we're looking to say, do we get a rotation of money flowing from some of these big I names to other sectors, or does the broader market sell off very, very hard and we're going to have a tough go of it for a while? So a couple of things I'd be looking at. If NVIDIA continues to pull in, I'd be watching the QQQE and watching, does it outperform QQQ? We know that this has been leading by a wide margin, and this has been lagging. If we start to see the Qs come in and the QQQE continue to outperform, that tells us there's rotation going on within tech. Also, do the same analysis with HACK, which is cybersecurity, IGV is the software names, and IWM, small caps. Do we see the semiconductors come in, pull back, and yet these particular sectors start to move up? That would tell us again that maybe we're seeing rotation. So again, we want to look at those sectors that are going to be possibly holding up as maybe the SMH starts to retreat. We also want to be aware of bonds. If bonds start to really rally as the market equities come in, that would not be great for stocks in the short term. It could signal with bonds rallying that the weakening economy and that the Fed, not the FED, will be forced to cut interest rates because they really see a weakening economy and maybe the Fed is behind the curve. So check all these as we watch how this develops. We might get rotation, we might get a broader sell-off, or maybe we just go sideways for months and chop. I think the sideways chop is a real strong possibility. I do think we're in a bull market, and the market might just chop all the way out until the election. So I would also keep my eyes on the ARK Innovation Fund, as I mentioned also, IWM on the right. This is a weekly chart of ARK. It's been in a downtrend for a long time. In 2023, it started to try and grind its way higher, but it's gone absolutely nowhere in 2024. You can see here that there's been resistance, and this is all about innovative young tech companies, biotechs, etc. So you can see the relative strength line has been breaking down. We're hitting new lows relative to the market. So if this starts to really roll over in price, that's really bad, probably for the market and signaling some broader sell-off. Same thing with IWM. We're all waiting for IWM to rally. You can see here that it really hasn't done much. It's tried to move higher, but that's been completely chopped. Everybody's been chopped up in here in 2024, looking for a big rally in small caps. It's probably going to come at some point when rate cuts are happening, but you can also see that it's gone nowhere. And look at the downtrend of the relative strength line. We're hitting new lows in relative strength. So even this chop of the small caps is telling you, though, relative strength-wise, it's just woefully underperforming everything else. So I would keep our eyes on this. If semiconductors come in, but we see these names, these ETFs start to get stronger, that could be a good sign of rotation, healthy rotation, and the market would be stable. So keep our eyes on all of these things. This is a sentiment survey, the American Association of Individual Investors. This is retail investors, what their sentiment is over the last 4 weeks, bulls and bears. You'll notice here from May 29th to June 19th, here's the percentage of bulls, 39, and it's been ramping up to 44. 44 is above the historical average, so things have been ramping up Retail is getting more and more bullish amid all these NVIDIA headlines. Everybody's excited, and the market breadth actually has been deteriorating for at least 3 to 4 weeks. And you can also see that the bulls have shrunk, or excuse me, the bears have shrunk. We only have 22.5% bears. That's the lowest level we've seen in a month. Again, this combination of the retail bullishness going to high levels and low levels of bearishness, just about the time that you're going to see a pause or a consolidation or a correction in the market, because the retail crowd tends to be wrong. So let's wrap up. Before we do that, I want to point out a couple things more big picture. One, Ted Williams was the last baseball player, to hit over 400. In 1941, he hit 406 for the Boston Red Sox. Previously, 1923, Harry Hillman hit 403, and that was the American League record with the Detroit Tigers. And Bill Terry hit 401 in the National League in 1930 with the New York Giants. But Ted Williams was a really, really skilled hitter, and he had a great eye. And he had a great eye on the strike zone. And this is a diagram where the ball was pitched and what Ted Williams' average was. You can see when the ball was low and away, he only batted .230. But you can see in this inner zone here, very, very specific zone, 3x5, you can see his average is like 380, 390, and 400. So Ted Williams didn't swing at many pitches unless they were really in this hot zone of the chart. That's how you hit 406. So we always want to wait for the right pitch under the right market conditions. Remember, the idea is playing in the stock market is a game of probabilities. And we know that a casino has an edge in the casino games. The longer you play at a casino, you're going to lose money over time because the casino has the edge. Now, in the stock market, we want to be the casino. We want to be running our methodology that has an edge. It's all about waiting for the right environment with the right pitch. So please be aware of the market. Right now, the market environment seems vulnerable and risky, and we want to make sure our exposures are dialed in. So as a wrap up, you've talked about the index got hit Thursday as the large cap AI pulled in. More to be seen. We'll have to see how if we get rotation or the market comes in harder than we would like. 20-day moving average, the indexes on the surface still look good. I mean, they're both above the 20-day moving average. So that's okay. New highs, new lows, very poor picture currently. So I still think it's a very defensive posture. Take this indicator pretty seriously. And the action of leading stocks. We've seen the leadership get thinner, and we've seen the semis starting to pull back a bit. NVIDIA as well is on a watch. So we want to watch for rotation or rollover in the broader market. Exposure levels, I didn't make any change this week. I still think 20 to 30%. Now the caveat is the 20 to 30% in my mind is holding positions that you have cushion, at least 30, 40% to withstand a pullback or the chop. I wouldn't be initiating any new positions right now. It's too risky of an environment, especially with the AI stocks potentially pulling in. But stay engaged, continue to build watch lists. There are a number of stocks that are building bases, and they're going to build out those bases and hopefully launch a new bull leg. So we always want to stay engaged. So the quote of the week this week is from Frank Gretz. Quote, "I'm here to tell you if you trade stocks, being wrong happens a lot. Get used to it and learn to deal with it. It's not so much whether you're right or wrong, it's how long you're right or how long you are wrong." Some strong words there to live by. The market is tough. You have to cut your losses short, and you'll take a lot of small losses, but you'll stay in the game over the long term. For those of you interested, the Boston meetup is having its next meeting on next Tuesday night called Rose and Thorn. And Rose and Thorn is where we have members of the meetup. We have 5 people that are going to share their best trade of last 12 months. That's the rose. And they're going to share their worst trade of the last 12 months. That is their thorn. It's all about post-analysis. And we'll talk about lessons learned for post-analysis at the next meetup. Just go to meetup.com and search Boston IBD Meetup, and there'll be a Zoom link to register. And you must sign up to get a link to the recording. So last reminder, Rain King Insights, to send me an email to support@RainKingInsights.com if you're interested. I'll be sending an email to the list that I've been building with an early bird coupon for those people that are interested in checking out the site and deciding if it's something that they're interested in. That is the general market update for June 21st, 2024. Look forward to talking to you all next week.